to go through the arduous reboot. So good morning, everybody. How you doing? Good to see you. Welcome to Forex.Today. Let's get our strategy session going, huh? And something weird happened. Let me do it again. So welcome to Forex.Today. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. What's your name? Yeah, I'm a currency trader. I work for TradersWay.com, an ECN that offers Forex traders access to the interbanking system, but also to the energies markets and metals and stock indices like the Dow and then the Nikkei and the FTSE. You like the NASDAQ? We got that for you too. And binary options for scalping and hedging. Hey, we start these sessions every day, 7:30 in the morning, New York time. That's 2 hours before the equity open. It's also approximately London lunch, so it's a good time of the day to get together as a global team and align their satellites and share ideas and thoughts and strategies. We're here at Forex.Today every Monday through Thursday, and then Fridays, every Friday, at fxstreet.com. Please go to Forex.Today and click on register. Throughout the day, you'll get at least a dozen Forex trading ideas, and then there's an archive of these live webinars made available to you as well. Lots of resources. So yesterday, I said, hey, we have a team of analysts. In fact, you can see the team here. We have a team of analysts that leave trading ideas for you every single day. They spend hours writing down their trade plans and sharing them with you. Did you leave any feedback or comments for them? So yeah, I think that is an important part of your development as a trader, to not just stare at the charts and think what you think, but I think you should look at what other people think and see if you agree or disagree. Do you like it? Do you not like it? And I think it's, really a personal education. You'll see to leave the feedback, you're going to need to log in. That's all. So register. It takes almost no time at all. But I think you should go through and see what other people are thinking, and then document whether you agree or disagree and put down your own thoughts. It's like having a personal trade journal. Just going through, a dozen different trading ideas with different strategies and time frames and experiences, and what do you think? What do you like? What do you don't like? You should document that for you, and then of course for the community. Or just keep doing what you're doing. Maybe you'll change. Good luck with that. All right, so yeah, let's do some technical analysis. What do you stink? Smell like a plan? You know what I actually wanted to do first, and I got sidetracked this morning, but let's do this. It's going to be new for me. Fed funds futures, Fed watch. That should be enough. That's not it. No. Oh, it usually comes right up. It's funny. It usually comes right up. I must have put too much in. Let's see. Okay, that's it. So yesterday, before the FOMC meeting, we looked at the Fed funds futures market and specifically the pricing between different contract months. And yesterday had a 5% chance of the Fed raising interest rates according to the way professional investors were pricing their short-term bonds, otherwise known as the money market or the paper market. You should take a look here. This probability has gone up now, hasn't it? This is the probability for December. What was it yesterday? Was it like 30% or something like that? No. Yeah, 36. That sounds about right. 30, 36. And remember, the way that this is derived, this probability, is how prices have changed relative to each other. So again, it's not a survey of, the CME group sitting down with traders and say, hey, well, what do you think about the December meeting? Are they going to raise or are they not going to raise? No. This is not them discussing that. This is the market actually pricing in what they believe is true. It's like an auction, right? It's the equilibrium point between supply and demand curves. So now if you lend the federal government $99.81, they will pay you back $100. Okay? So it's gone from, I don't know, I think it was like 30% chance of a December hike. Now it's a 43% chance. Pretty close to 50-50, huh? So prices have changed. And what was the June? June was 70, right? Let's look at June. Oh, snap. 80% now. How about April? Looks like everything is up. Yep. So the market's saying if it's not going to be December 16th, then it's going to be January 27th. So that's cool. But of course, what I've been saying since, the last 3 months, is that I don't think they should raise, but they said they were. They keep saying that they're going to, so I would have to assume they will. Right? So that story hasn't changed, but so again, if you think the United States is going to raise interest rates, the dollar should appreciate. This is the US dollar versus the Turkish lira. Şerefe! That's me drinking my ouzo right there. Yeah, time to dump the lira. Ouzo is Greek. Sorry, I'm sorry. Well, what do you call Turkish ouzo? Rocky, sorry. Sorry. My apologies. Settle down. All right, so Christian. Christian. All right, well, look, I know Turks. We drink. I've drank things that taste like ouzo with my Turkish brethren from time to time. It has been a while, so I've forgotten, but So, so they drank something, I'll guarantee you that much. Actually, the coolest guy I ever met, like cool, like just flat out cool, is Turkish. But he's just like the coolest guy ever. Like Jim Morrison. I think Jim Morrison must have been his uncle somehow. I don't know, but the guy was just cool. It was in college that I knew this guy, and he just, you'd just find him sitting in the dark, smoking cigarettes, listening to music. I'm like, dude, are you sitting on the floor listening to music, smoking? Like, yeah, and he wore leather pants for a whole year straight. Yeah, so not my bag, but he carried it. All right, so let's take a look at some other things and see how the world changed, if any. Look, oil went from our resistance area down to our support area. Leo's that cool, huh? Right on, man. Hey, are you wearing leather pants right now? I mean, I'm telling you, he was that cool. So, Tim. Oh, yeah. You guys are funny. Oh man, you brighten up my day. Thanks, guys. Cool. So oil comes down, hits our support zone. Neat, huh? But you know what's interesting? Look at our stochastic cycle. Feels a little overbought, doesn't it? So we'll see what kind of happens in here. I guess I'll drag this across a little more. But I don't know. What do you think? Will it double top up in here? So if the dollar strengthens, you won't need a dollar will just buy you more oil. So if an ounce of oil cost 10 cents, now an ounce of oil costs 9 cents, not because of oil change, but because the dollar is stronger, then it seems like prices have fallen, at the very least, right? So we'll see how much that plays out. It's funny, like my experience is that when the dollar changes value, oil prices do change because of it. I mean, it has to. But usually in a healthy market, it only does it so much, and that true supply and demand take over. But I don't know. Nonetheless, we'll see what happens here. You'll see though that price actually rose off the news, and that could be the idea that if the world is strong enough for the Fed to raise interest rates. Remember, China is easing, Japan is easing, Europe is easing, Australia and New Zealand are cutting interest rates. I mean, so on and so forth, right? I mean, there's a whole lot of accommodation in the world, and yet the United States wants to raise interest rates. How wild is that? So, well, if the U.S. is doing that well, then maybe there's hope for future demand. Okay. Possibly, right? That things can't get any worse. Well, one thing I've learned over my course of the years or decades of trading is things can get worse. Don't you worry about that. But anyways, it's an interesting reaction, though, isn't it? Because we know that the initial reaction was dollar positive. We could see that here. That's the dollar appreciating right? Versus the euro. Let me kill this now. This is the chart I had set up for you guys. And this is the initial role reversal. Look what actually happened. I haven't touched this chart since yesterday. Felipe, which dollar index do you use? But what do you think, guys? Do you see how we came off the old congestion level, came back, straight down? It's beautiful, isn't it? All right, so the reason I don't use your dollar index that you're using there with your other broker is because it's not an equally weighted basket, and you're basically seeing Euro USD. The one that you're looking at is going to be heavily, I think it's like 40% Euro and like 3% Canadian dollar. I'm like, what? So, yeah, so you're basically looking at some Euro USD. So it's just, I don't like the weighted baskets. I don't know who came up with it or why. And whoever came up with it and their reasoning for it, for the weight, probably occurred 10 years ago. And they haven't changed it. So I just don't prefer it, that's why. But there's a dollar index that I actually haven't used. It's kind of interesting because I love finding out what I don't know, because you don't know something until you've been told you don't know something, and then you're like, wow, I can't believe I don't know that. I was listening to an interview with a trader or investor at the very least, just recently. I can't remember what it was. And the guy said, well, I like to use a dollar index that includes emerging market currencies. I'm like, what? So I guess I gotta, when I have some time, I need to Google that. So, but okay, so let's go back to the thought process here. Isn't this amazing? Even after the news, look at this. I swear that orange line I drew for you yesterday. Look what happened. Boom. And I bring this up because I think it was last week. The reason I have this chart as nothing but a line chart is that we were talking about simplifying the trading. Somebody asked why I have so many lines on my charts, and then I say, well, and I realize that you see lots of colors, and I only see what I need to see at that moment, like a heads-up display. So we did the opposite. I just put a basic line chart, and then I said, well, the first thing I look for is support and resistance. And that's all I'm really looking at here. There's no pivot points. I'm using a fib, but not necessary at all. I mean, I can get rid of that. And so all we're doing here is looking at support and resistance, and then putting it in the context of a trend, right? And what I mean by context of a trend is that the support and resistance is second most important. I like to start with my technical or fundamental bias first and foremost, right? So I say, what direction do I think the market's going, generally speaking? And then where are we now as we go in that direction? Okay. You can see here again, even the fib's not that important. What's important is support and resistance, right? I think we can all agree that seems to be very like an old level support, doesn't it? We broke through it, we came back, we did a retest. I call this returning to the scene of the crime. And that's even with the crazy news. Okay, that's with the crazy news, the craziness. Well, it doesn't seem that crazy, does it? So, and I believe this conversation up in here when we were in this zone is that, as far as I'm concerned, none of the fundamentals are surprising. I believe the trend is in play all year, and that we were talking about here that this could slowly work its way through parity and all the way down to 80 if it wanted to. Right? I believe we've been talking about how, you know, when does it begin? And will you find yourself 2 months from now looking back saying, wow, I should have shorted at 15 or 14 or 13 or 12 or 10. Now we're at 9. When do you hold your trades? When do you start letting it run if you can? When is it a trend and when is it noise? And these are really serious questions, right? I mean, this is what every trader is going to have to decide. When is it a short-term trade? When is it a long-term trade? When does it stick? When do you build positions? So yesterday we were talking a little bit about Jim Rogers, the commodity trader that made billions. He gave the secret on how to become unbelievably successful. When he was running a hedge fund, they would do things like make 4,000% a year. How do you make 4,000% a year when everyone else is happy to make 40? How do you do that, guys? Well, there's ways to do it, Sebastian, without gambling. Now, I will admit, most hedge fund managers are degenerate gamblers, but there's a proper way of doing it. First of all, you have no diversification whatsoever, is one of the things he said. Diversification are for money managers that are trying to lower downside risk, so what they do is they lower upside potential by spreading bets around everything so that losing bets are offset by winning bets, but nonetheless, because you're reducing the risk, you're reducing the reward. What he's saying is you do your research, you do your research, you do your research, you do your research until you're the smartest person in the room times 2. And he says most people are just followers anyway, so it's not hard to do. But you come up with your own ideas, you set them up and you wait and you wait and you wait. Okay? That's the first one, like waiting all summer for the US dollar to get strong. That's like when remember the EURUSD was going up 3, 4, 500 pips? And I said, just prepare. Look, the fundamentals haven't changed. Then we look at the COT. No one's actually buying the euro, but the euro's going up. Get ready. When the bears sell again, it's going to fall. It's going to fall hard. Do you guys remember all of this? I mean, it was absolutely, totally clear, right? I must have spent 2 weeks talking about it. Get ready. I just don't know if it's going to fall at 15 or 20. But you need to be prepared. Look at the facts. Get the data, right? Nobody's buying euro. EURUSD is going up. Nobody's buying it. So how is that possible? Those that are bearish are getting out, and they're going to try again later at resistance. And all of a sudden, Euro USD has dropped 600 pips, guys, in 10 days. Doesn't that just blow you away? If you didn't get a significant amount of those pips, you need to get angry. Do you know what I mean? Again, you need to change your behavior. Do whatever it takes. If you were prepared and you didn't make a lot of pips, then you need to get angry and say, well, what did I do? What was I thinking? How could I miss that? Okay? So anyways, the first part is to have what I call a sellable idea, right? We talked about this last week as well. If I gave you $1 million, I'm going to ask you, what are you going to do with my $1 million? And you need to have a good idea. You need to tell me what you're going to do as a foreign exchange trader with my $1 million. Something like, I'm going to buy US dollars because the Fed's going to go into a tightening cycle when everyone else is cutting interest rates or doing quantitative easing. Okay? There's your sellable idea. That's what Jim Rogers would say, like, do the research, do the research, do the research. And when you're watching Euro USD go up, you'll love it because you're just waiting for key levels of resistance. Maybe it's a monthly pivot point, maybe it's a psych level, but you're going to get ready because you know the market's wrong because you've done your homework in advance. Because you can say Euro USD has moved up 400 pips, yet I can prove to you no one has actually bought the euro. It's just simply bears getting out of a market, and they will get back in unless something fundamentally changes. Okay? And then what do? What's the next secret to getting filthy, stinking rich? Is another way of looking at it. What's the next secret? You've done your homework and you're the smartest person in the room. And you can back that up with facts, not opinions. Now what's the next step, guys? You already have leverage. Not a problem. Well, now that we've waited, right? Right, Guy? So now what? Right, but what are you going to look for specifically? Of course, wait for the right moment. But what was that yesterday or was that a week before? You need to wait for, so 2 weeks ago, we were watching Euro USD go up, and for 2 weeks, the previous 2 weeks, right, we had watched Commitment of Traders report tell us that the market's still bearish. No one's actually buying euro. Euro's going up, but no one's buying it. So let's prepare, let's prepare, let's prepare. At some point, we get a bearish engulfing candle, don't we? 2 weeks is so long ago, I can't even remember anymore. Okay? You wait till you get your resistance, you get your big drop, and then what? These are daily charts, by the way, guys, right? You get up to clear resistance, and then when you believe you're right, when you believe the process has taken shape, okay, this one I got wrong, but I was ready for it. This is where you sell, jam your stop to break even, and sell again. Jam that stop at break even, sell again. And jam that stop at break even, sell again. Jam the stop at break even, sell again, sell again, sell again, sell, 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 sell. Move your stop, move your stop, move your stop, sell, 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 sell. And all of a sudden you got $947 billion short euro. and you make $947,000 per pip, but you have 100% available margin in your trading account because you've entered one trade at a time and you have no risk. So do you remember in September, we talked about this, didn't we? No, sorry, not September, July and maybe the beginning of August. We talked about this a lot, about how to build a portfolio. Was anyone here for that? I did talk about it for probably about 3 weeks. It was just sort of the overlying theme at the time because, you know, it's summer. Sometimes trading can get pretty thin in summer, so it's a good time to talk about it. But you build your portfolio, and that's a lack of diversification, right? You got one trading idea, buy dollars, or maybe your trading idea is sell euros, whatever. But when you're right, you need to be extremely, unbelievably, ridiculously right. Without the degenerate gambling part, which is just throwing down a big trade and hope you got it right. I would rather you put in, you know, one trade at a time, remove the risk, add another one. Maybe it's only one trade a day, but every single day you need to sell EURUSD. But more likely you're doing like cycles and stuff, right? Right, there's a lot on this hourly chart, could have several different trades on there, right? So if this thing's dropped, you know, 500 pips, you certainly could have 3 trades open right now, right? You think that's reasonable? Over the last 2 weeks now, since the middle of the month, right? Since the 15th of October, you could have 2 or 3 trades open, right? One with, you know, just under 500 pips, another one just under 400, another one with just 300, right? Which means clearly you could be over 1,000 pips. Right? Look at this area here that I drew for you yesterday. It tells me that I wasn't the only person on the planet that had that as resistance, and that's what makes it beautiful. And what do you do now? Hopefully you got, right, 2 or 3 trades open, your stops are at break even, and you're preparing to add another one. Okay, so you got 2 scenarios here. You work all month adding to your positions, adding to your portfolio of either euro short or dollar long, whatever you're doing. And let's say 2 weeks from now, it all falls apart. Euro USD goes up 500 pips again and knocks out all your positions. How much money have you lost? So it goes on your trading record as haven't made any money, haven't lost any money, right? You collected some interest or something, right? But generally speaking, on your track record, which, you know, professional traders care a lot about, because it's required in the United States that when you meet with someone, you have to show them 5 years of trading history. Required. So you care. You don't want to see a big -9, right? You lost 9% one month. Yeah, really? That's the end of that. right? You might as well just quit and become an amateur tattoo artist. So, so that's that. So you have a big zero, and you'll say, well, you know, it's a rebuilding month. And that happens a lot. You can spend 1 or 2 or 3 months rebuilding your portfolio. It happens to me all the time. Where for 2 or 3 months, not much happens. You have a small losses or small gains. And the reason for it is you're adding a new trade. Maybe it goes up a couple hundred pips, and you lock in 100, right? You lock in a little bit of profit, and you start building more trades, and then the whole thing collapses. The trend just doesn't grab, comes back, knocks you out for a small profit, like 100 pips, or maybe it's a new trade, you just entered it, and it knocks you out for minus 25. It was a bad day. Again, it looked like it wanted to go, and it set you up, and you did buy it at support, and you did get the reversal pattern, you did enter it properly, but you lost money anyways. Boo-hoo. And you could do this for 2 or 3 months where you're basically a break-even trader. Yeah, you might have made 50 trades, but some lost, some won, a lot broke even, and just nothing happened. But maybe you have 2 or 3 that did stay, and they're still open. But 2 or 3 that stay open per month, after 3 months, you got 10 open positions. Now, if you're in a trade for 3 months and you haven't been knocked out at break even, how many pips do you think you have? You've been in for 90 days. Do you feel pretty safe that you've entered in fundamentally, appropriately? Like your trend is, you've traded the right trend. Your marketable idea was correct. Do you think those trades would make you more money than you're doing now, day trading? Maybe. Okay. I think day trading is a great way to hedge those positions, indirectly hedging because you're trying to make money today. But that idea is you might spend 3 or 4 or 5 or 6 or 7 months building your portfolio, having month over month very, 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 very modest gains. You understand? Because you get lots of break-even trades, some winners, some losers, but all you're trying to do really is keep the portfolio going. And so your investor calls you, how's it going? You're like, wow, our euro short now is up, we got another couple of million short the euro. And he's like, wow, that's awesome. Click, right? Because over the course of time, you're able to build up those positions $100,000 at a time. And then what happens when the trend does take off, but you were able, over the course of 3 or 4 or 5 months, build up 10 or 15 open positions? Over the course of 3 or 4 or 5 months, now you're short Euro USD, $1.5 million worth. And then, boom, you have a situation like this where the thing moves 500 pips in just a few days. And you have 10 or 15 open positions? How would you feel right now if you had 15 open positions on Euro USD and the Euro USD moves 500 pips in your favor? How many pips is that? Yeah, you're going to end October with pretty close to 8,000 pips. $8,000 pips. But maybe the last 6 months, you haven't made anything. That's the problem though, John, right? Is that for the last 3, 4, 5, 6 months, you basically haven't done anything. And I'll show you why. The market moved sideways since April. You haven't made any money since April. What if here, this big spike at the end of August, and this was the Fed not raising interest rates, so this thing blows out all the trades you made this year. Now, you still might be short here, guys. Can you see this? Last year is the year you should have done unbelievably well. I mean, it dropped 4,000 pips, right? Sorry. Don't exaggerate. It only dropped 3,000 pips. But what if you had, in the course of that year where it dropped 3,000 pips, could you have built a portfolio of at least 10 trades? Yeah. If it was the opposite, if you were like an Aussie yen long, right? Or long Aussie yen, you make $1 million worth of Aussie yen. You make $25 a day. Right? $25 times 365. Okay, boom. That's how much you made. Almost paid for the trade itself. Isn't that amazing, guys? At some point, if you can hold almost a year, the trade almost becomes free. So, I don't know, I just want to kind of change the tone a little bit because we talk about fundamentals, we talk about the long-term technicals. Every single day I tell you it's the most important thing. And very often we're talking 3 and 6 months ahead. Sometimes we're talking 3 and 6 weeks ahead. And sometimes we're talking 3 and 6 hours ahead. But we need to change your behavior so you're not just opening your charts today looking for today's trade. What I keep trying to tell you that when we meet today, we're talking about tomorrow's trade. Do you guys get that impression? I'm not even looking at what I want to do in the next hour. We talked about that yesterday. So I want you to specialize. If you don't mind, we'll turn the conversation away from just trading 5/8 crosses at support. At some point, you got to figure that out too, right? But we can turn the conversation around to how to get filthy, stinking rich, and that would be lack diversification. Have a true idea. I don't care what your idea is. I mean, you need to get upset. You need to get mad in a positive way and say, I have to change. I need to do something today radically different than I've ever done before. Maybe you go out and get a tattoo on the palm of your hand. Ooh, that would hurt. and it's on the left hand, in the left palm it says euro, and on the right hand it says dollar. You know, what do you do? Euro, dollar. I don't know. I mean, like, no joke. Do something crazy. Paint one of the walls in your office, and just so it says sell Euro USD. I mean, have a marketable idea. And you might have to wait a long time for it. Like, are you going to sell yens again? Well, every time it drops to 120 or 119, I've asked you to buy it, right? How many times have you heard me say, every time your USD yen comes down to 120 or 119 or 118, you just buy it? How many times, guys? That I'm waiting every time USD yen comes down, I want to buy it. Dozens of times, right? And the thing's been moving sideways for a year. And there's one of two things that are likely to happen in a scenario like this. Like, let's talk about the likely result of this behavior. I do this all year and make no money. What's the other outcome? Well, that's the same thing, right? I work all year and I don't make any money, or I work all year and I make a ton of money. What's the difference? Like, is my behavior any different between a break-even year and a fabulously wealthy year? No. I show up and I do the same thing every day. My homework is, reevaluating the global macroeconomic cycles and trying to time what Australia is doing with what China is doing to what Euro's doing to what the US is doing and what the Bank of Japan is doing, and I'm trying to time all these different cycles. It's sort of like juggling. But I'm not changing anything. The only difference between a break-even year, if you have a strategy, I want you to hear this point, the marketable idea, your trading idea, what is your idea? If I trade with my idea behind me, with my bias, the only difference between a year that's like, versus booyah, the only difference between mediocrity and an exceptionalism is the market. The market's the only thing that changes. And this is why I say, when the market doesn't do anything and you have a fabulous year, a professional investor will spot that. That's why they have, that's why we have risk-adjusted performance strategies, risk-adjusted performance calculations and stuff. And we'll look at it and say, well, the beta was like 0. Nothing happened this year, but you had a huge return. And there's going to be a red flag. People don't like that. And you think you're awesome. You're like, man, I made 300% this year. Really? Because no one else that I've looked at has done that well. Why were you so awesome? And it's a big question mark. It's a big red flag, because usually if you outperform the market, and that's what the beta is, if you outperform the beta, then you probably outperform by taking additional risk. Nobody wants that. Do you understand me? Nobody wants that. Nobody. Hey, I made 300 pips. Or look, hey, I made 300% this year. Hey, you're fired. But the guy that made 50% that year when everyone else broke even, well, maybe. Let's take a look at what you did. Okay? And then on years, there's a strong trend. 300% may be a bad year for you. You're like, really? Because it's like the guy that said, man, I made 200 pips last week. Really? But the market moved 500 pips. You lagged. It was a bad week. Okay? So if the market performs, you should perform well too. So this is why I say, have a marketable idea. If it's buying, buy in uptrends. If you're going to sell the EURUSD, guys, you don't sell it as it's rising to 115. You sell it as it falls from 115 to 110. Sell, jam your stop. Sell again, jam your stop again. Sell again, jam your stop again. Sell, 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 jam your stop. Jam. Break even, break even, break even. It doesn't matter. Just keep selling it. And maybe 25% of your trades stay open. That's why you want to sell it 100 times if you can. Because you're like, I've been waiting all summer for this. And we hit 115. And I've been looking at the COT report. I know I'm the smartest person in the room because I can tell no one's buying euro, yet EURUSD is going up. This is exactly what I want. Hits 115, bearish engulfing candle, game on. I'm going to fire for effect. Who remembers me saying that? Fire for effect. We talked about artillery. Look, if 1 or 2 shells will take out the target, drop 10. Kill them 5 times. Right? And then be prepared. Now, you have no diversification. Right? You have no diversification. You only got one idea. You're only doing one thing. Okay? And this is why I say you should open 2 accounts at TradersWay. One account is for portfolio. You're a portfolio manager. I want you to think about it that way. Don't even call yourself a trader when you're looking at those charts. Okay? I want you to actually write it down. This is a goal you're going to work on. Portfolio management. Okay? A portion of every day should be set aside for you to practice your role as a professional Forex portfolio manager. Okay? That's what I want you to do, James. Just a small portion of your time every day, James. You can do that on your own, James. Right? Just do that. Don't worry about everybody else. Just do that. Just not all the time, because your other account at TradersWay should be for day trading. Because let's say your sellable idea is you're going to sell EURUSD, that's what you're going to do, but we know, and we've seen for 2 or 3 weeks, EURUSD could go up. Well, your day trading strategies now, right? Right? Your day trading strategies should be, make money today. If you think your dollar is going to go up, then, buy it. Right? And if you make money today, you're offsetting the losses in your portfolio. So that's why I say you need to have separate hats. You have your day trading hat, and then you have your right? Right? Portfolio hat. Because then you start thinking about how does today's price action impact the portfolio? And those are the interesting questions. Where are we in the process of euro dollar falling further, for example? Okay, but be prepared. You know, you could buy here and do nothing for a very long time, or if you're a buyer, right, up, up, up. Each of these retracements are potential buys for you. Okay, so you could have, like, let's say you have a trade entry here at break even, probably one in here at break even. That one probably scared you up, but you bought this one. That's another easy one. Okay, right? You bought this one because that's a nice roll reversal. This one here got knocked out, right? So up, let's say you bought this dip too, right? And then this big drop, that knocked this one out. That knocked this one out. And these three are still open. Okay? So this rallied up, came off here, right? So you bought this, and you're hoping this stays open. So since October, I think it's pretty realistic you could have 3 or 4 trades on this, and that 2 of them have been knocked out. And you've just recently entered your 4th, and you're profitable, and you are up 100 pips. Well, no, you're up 50 pips on this one, right? Or maybe you bought the retracement back at 20. That's a pretty obvious one, right? And these are, you know, to you, you're still worried about them, but they're all profitable. And you're like, if we can get through 21, you know, the next challenge is 2150 and all that kind of stuff. But realize too, the thought process is maybe we get additional quantitative easing in the next 48 hours from the Bank of Japan, or at least a plausible discussion of doing it. And that would weaken the yen. We did talk about that last week. Okay. And so it's highly plausible, but see, we could on Friday, Kuroda at the Bank of Japan could say, absolutely not. No more additional quantitative easing. It's bad for Japan. There's no way I'm going to allow that to happen. And what happens? Takes all of this out. And you ended up making nothing. That's right. No, but it happens, and you have to realize that that's the downside to the portfolio. But a professional investor wouldn't be bothered by that, because they would see that you traded euro dollar a lot, and that they know that the Bank of Japan hasn't made any changes, and we know that the market was mispricing dollar all year. Every Fed meeting, the market was certain the Fed had to act. And there were times when they're like, if the Fed doesn't raise interest rates in March, they're just being negligent and dangerous. Do you remember all these conversations? It's dangerous that the Fed won't raise. They have to raise, they were saying back in March. So clearly, too many people were long US dollar. A professional investor knows that, and they would look at your trading and say, well, I get what they were doing, I understand it, but the euro dollar's been in a 500 pip range for the entire year. But the previous year, it dropped 4,000 pips. Right? Sorry, I said it again. Sorry, 3,000 pips. Okay, last year's range was 3,000 pips. This year's range, 500 pips. So which year should you have made more money? Last year. And why? Why not this year? Is it because you're not as good of a trader? No, the market didn't perform well. Your job is to perform along with the market. And when the markets move well, it's Ferrari. And the markets don't move well, it's Toyota. I guess I should use a different example, right? On good years, it's Lamborghini. On bad years, it's Volkswagen. Because Volkswagen owns Lamborghini. Isn't that funny? Jaguar, Tata. So anyways, again, I'm just asking you to think outside the box. And I guess I'm asking you to get mad and angry in a positive way, get radical in changing your behavior, get radical in changing your thought process, and, fight for it. Okay? Because I think what could happen is you wake up and at the end of the year, we're at 125 again on USD yen. I'm not saying it will, but it could happen, and you're like, oh snap, I missed that. I had all year to do it, and then I didn't do it. And then you look at euro dollar, and it's going to go from 115 down to parity by the end of the year, and you're like, damn, how did I miss that? Right? We talked about it every single day all year, and then I woke up and I still didn't make any money. Do you want that to happen? So pretend it's a test. Pretend it's a test. I don't know what's going to happen between now and the end of the year, but I did say last week, get ready because this could be it. Right? I did say it. Get ready. This might be it. This could be the beginning of the end of the year. Because we know no one believed that yesterday the Fed was going to act, but we believe it could happen at the end of the year, and it's lining these things up. This is why last week I said, what if next week's non-farm payrolls is good? Right? Last week I said, what if next week's, which is 2 weeks in advance now, NFP is good, what happens? The Fed funds futures rate will change. And December will jump positively. It'll go from 43 to 63%. Okay, then what? What does that mean? It means interest rates have already started to go up in the open market. Dollar gets strong, euro already weakened, and it's gone. And you look at it and you're like, holy smokes, are we talking about parity? Uh-huh. Oh, yeah. And you'll say, well, we were just at 115, now we're talking parity. That's 1,500 pips. And you know what should be shocking? What if it fell 1,500 pips and you didn't make 1,500 pips? See, if you build a portfolio, if it fell 1,500 pips, shouldn't you make 5,000 pips? That's the difference in mindset, though, right? Because then you say, oh, Wayne, well, that sounds ridiculous. You're being ridiculous, Wayne. And, oh, I've been accused of that before. But if you had 3 trades open, right? Or 5 or 10. But the thing is, what's your mindset, guys? Are you preparing yourself for that? If this drops, ECB adds to quantitative easing, Fed raises interest rates, why wouldn't it go to parity? And I don't even care about parity, but it's a psychological thing. People are emotional about it. But like, what if it's a test? You're like, you know what? Gold, dang it, I'm going to do it. I'm going to try and try and try and try. If I have to make 100 trades between now and the end of the year, one at a time, of course, if the market's falling, I'm going to sell rallies at fib retracements and roll reversals. Let the trade move. I'm going to jam my stop, and then I'm going to try again later in the day or the next day and see how many trades you can get short one at a time and never take profit. Just for fun, would you try that for me? Because I've my webinars at FX Street, I tell people, my basic goal for those webinars is I want to contribute to an extra 1,000 pips. Well, I think it'd be awesome if you can make thousands of pips between now and the end of the year. And if you do it right, the only thing that'll dictate your mediocrity or exceptionalism is the market moves. But I'd like you to focus and change your behavior so that if it does move, you don't miss it. You understand? If you keep making 20 and 30 pip winners, that's fine. You'll get paid. It'll be fine. You'll be fine. It'll move 1,000 pips, and you'll make 300. And you'll feel really good. And your life will not be any different. Because the only way to get filthy stinking rich that way, guys, is by increasing your lot size. And that's the formula for disaster. Right? Well, maybe, but it has to. If you're only doing day trades, you're sort of it's almost like product dependent. Okay, it's like you sell widgets. Your widgets are 15 pips each. And every single day, you need to find more customers. And that's it. You're not even in the widget business. You're actually in the finding new customers business and then convincing those people to buy your widgets. Okay? But you're constantly searching for just new customers, new customers, new customers, new customers. Okay? Maybe catch a trend and you get some opportunities that repeat, but generally speaking, you're always trying to find new customers. Versus a residual income business where you get a new customer and they pay you every month. Okay? That's sort of the difference. Would you like 10 open positions that pay you every single day? Day after day after day. And if the market goes up 100 pips, you make 1,000 pips that day. And at the end of the year, if you're long Aussie dollar, one standard lot, times 10, at the end of the year, you're going to have $9,122 or whatever it is. That's going to be there for sure, plus all the pips on top of it. And if that almost pays for your position, let's say it pays for half your position, half your trade is paid for by interest alone. And as long as it's trending, you're going to get paid, but you're not doing any extra work. And so, so I'm looking at it sort of like, one is an income stream, the portfolio is an income stream, versus constantly trying to find your next 25 pips. Find the next 25 pips, find the next 25 pips, find, where am I going to get my next 25 pips? Is that right, Kenny? Yeah. Well then, James, we need to revisit our conversation we had in the summer, huh? So anyways, guys, again, I'm just trying to change the point of view and change the conversation, or even change the mindset. All these things that we've been talking about, they're now passing and becoming history, and I worry that time goes by and we just sort of stare at each other. You know what I mean? Time goes by so slowly. And sometimes if you crank up the heat really hot, really fast, you feel it, you notice it. And I'm just trying to make sure you notice where we are, and that we keep talking about these things. And I just worry that they happen, and you say, wow, that happened, and then we're at the same place a year later. Right? So I hope it's the right conversation at the right time, and I hope I didn't insult anybody, but I do want you to change your behavior in a positive way. Okay? So to review, I suppose, according to Jim Rogers, the commodities billionaire, who made 4,000% a year, not every year, but he certainly did. How did he make his billions? He made sure he was the smartest person in the room. Okay? And you do that by doing your homework. You understand that? Thinking about things. I want you to think about things. Where are we going to be in 6 months? Pick any currency pair you want for any reason. Okay, just don't pick drachmas and Deutschmarks. You're a little late on those. Pick any currency pair you want for any reason you want, and become an absolute total master. I want you to become the world-renowned expert. That you could go on a book tour, you could do a press tour, you can speak on CNBC and Bloomberg, and blow people away with your insight. That's all I'm asking you to do. And simply think 6 months ahead. Okay? That's all. I mean, you want to be a millionaire, you want to be a billionaire, well, act like one. Earn it. Find something and master it. And I'm only saying predict the next 6 months. And then think about, well, what are the dates over the next 6 months that would be important? What will happen over the next 6 months? Why? And then when? And just try to put it together in a timeline that makes sense to somebody. And then second of all, the second thing you said, right, is diversification is for those that are scared. So if you're investing your retirement income over the next 30 years, you're going to need some diversification. But if you have a marketable idea based on your deep, deep, deep knowledge through your research and you're a world-renowned expert in one currency pair, and you got the next 6 months planned out almost to the day, right? You know when the central bank meetings are, you know when the IMF reports are coming out, you know all the key dates, and you're ready, and you can think about them and time these things, and you got your pulse on the thumb, you know, your thumb on the pulse of that market, okay? And then when the market moves in the direction you said it was going to move, you kill it, you crush it, you destroy it. One trade at a time, remove the risk. Hit it again. Move your stop to break even. Hit it again, and again, and again, and again, and again. One trade at a time, but remove the risk. Hit it again. Get as many trades in as you possibly can. Hundreds if you can. Just keep jamming your stop. Just do not take additional risk. But destroy it. And if you're right, with a little bit of luck and some fortitude, you'll make a killing. You'll make a ton of money. If you've been trading currencies, let's say for the last 2 years, and you found a different way, then congratulations, but I bet you haven't. So then listen to Crazy Uncle Wayne. Right? Because I care. Your success won't bother me. Right? There's room in Forex. There's $5 trillion a day. There's room for you to be unbelievably successful. And if you find success, maybe I'd like to invest with you. I'll introduce you to some friends. There's tons of money to go around. I mean, doesn't bother me for you to succeed. You don't threaten me. I've got nothing but love for you. Right? There's room for you at the top, but you got to fight for it. You got to earn it. I'm only asking you to be the smartest person in the room, and then when the market is actually moving, I'm not talking about dollar cost averaging and buying on the way down so that you're down 98% before it finally goes up. That's just stupid. But when the market is moving properly, when the EURUSD drops 500 pips, you should have 4 or 5 open positions, all stops at break even, and if it just keeps going, you'll do very, very well. And if it doesn't keep going, well, it's better than losing money. Okay? So like I said, today's the beginning of the rest of the year, guys. Hopefully we can get some trends that come out of all of this as we move through, transitionary monetary policies around the world. Maybe we can get some trends. If we do, you'll do extremely well beyond your wildest imaginations. And you'll have to recreate your goals and aspirations, because the money thing will go away, and then you're like, oh my gosh, now that I'm making money, now what? You have to come up with bigger, more important goals than money. But we got to get you there first. But the market has to do it, not degenerate gambling, not risk taking. Nobody wants that. Nobody's interested. So peace on earth, may the pips be with you, may your profits be above average. Drink from the champagne, grab a flute. Love you, man. See you tomorrow.